Hi there, welcome to Kneppy Invest. Time for not only me to get a haircut, hopefully I'll do that tomorrow or the next day, time to also have a first look at a company on the ASX. This company is called Siteminder. They listed on the ASX just over 1 year ago. In fact, I think it was the 9th of November. So they would have just celebrated their 1 year anniversary on the ASX. And if companies are like any other culture in the world, they probably celebrated this significant milestone. And that significant milestone is becoming a publicly listed company. And I'm just wondering now if companies actually do a celebration on that fairly big milestone, because as I said, most cultures do that. Big milestones are celebrated, particularly the anniversaries of those milestones. So that's one of the reasons I am doing a video and taking a first look at this company. Now, the first time I heard about Siteminder was quite a few years ago when an investment company, a growth capital fund called Baldor, which is listed on the ASX, ticker code BTI, actually made an investment in this company. And that investment, or the value of that investment, grew over time and significantly grew over time. And at one point, the valuation of Siteminder as a private company was valued well over $1 billion. And then the management of this company decided to list on the ASX. And when they did list on the ASX just over 1 year ago, the valuation of this company was well north of $1 billion. However, the share price has been falling over the past year. We'll have a look at the daily chart towards the end of this video, and you'll see the share price of this company is in a well-defined downtrend, no doubt caught up in the tech sell-off because Siteminder is a technology company. Now, I'll just go briefly into what Siteminder does in the next video. Then we'll have a look at their financial year 22 results. Have a look at the Appendix 4C. This company does release quarterly reports. And then I'll have a look at the daily chart towards the end of this video. If you go to Siteminder's website, they call themselves the world's largest open hotel commerce platform. And within this platform, they have a lot of functionality. So I'll just briefly talk about some of the functionalities, not all of them, but just a few of them that are interesting. So they do have something called the Channel Manager, which allows customers to sell their rooms on all connecting booking sites. Online booking engine, which funnily enough is an online booking engine that allows customers to take direct reservations from guests through websites, social media channels, and meta search. Hotel Website Builder, which is an online tool that enables customers to create websites. Hotel Business Intelligence, which is a software that delivers data analytics and insights to help customers make decisions. Little Hotelier, which is a property management system for reservations, check-ins and check-outs, and guest information. And within their commerce solution products, they also have Global Distribution System, which is a network that enables travel agencies to access and book hotel rooms, airline tickets, or car rentals. Siteminder Pay, which is a hotel payment processing solution, and Demand Plus, which is a hotel meta search for travelers to see rates and inventory for hotels from various booking sites. So Siteminder has a lot going on within their platform, and no doubt they'll be able to build upon all the functionalities they are using, because not only do hotels use their platform, all sort of accommodation providers also use these platforms, use Siteminder's platforms. So maybe Airbnbs use it, small motels might use it, all those sort of accommodation providers use it throughout the world. So this is a global company, and it does look like Siteminder have created a really specific need for their platform within that sort of area, which is accommodation providers. Now, this company is not that old, founded in 2006 by two Mikes, Mike Ford and Mike Rogers. Mike Rogers is a current Chief Technological Officer, CTO, and Siteminder, as I've already mentioned, listed on the ASX 9th of November 2021. So again, one of the reasons I decided to do this video is because this company has been on the ASX for just over 1 year now. The current CEO, and I'm going to totally mess this name up, is Sankar Narayan. And funnily enough, his history is quite interesting because he was Xero's CEO and CFO for about 4 years, between 2015 and 2018. So he has a fairly impressive history. And the current biggest shareholder of Siteminder is Australian Super, with a 10% stake in this company. Now, the current markup of Siteminder, with the share price pulling back over the past year, is now well under $1 billion at $781 million. That's at a share price of $2.86. So I highly recommend having a look at the share price right now to see if it's higher or lower than that, because right now the markets are quite volatile. And I can't say, particularly if you are watching this video after November 15, and that share price was at the end of trading on November 11, I can't say whether the share price of this company is going to be significantly higher or significantly lower than $2.86. And again, the main thing here is the markup. Don't focus on share price, focus on the markup. And the markup of $781 million for a company, I'm getting a little bit ahead of myself, that is not profitable, tells us that the market thinks there's a lot of promise for this company moving forward. And the ticker code for Siteminder is SDR. So yes, the market does see a lot of promise for this company in the future, because when you look at some of these financial numbers, they might scare some investors away. Now, revenue has increased from $101 million last year to $116 million this year. So in isolation, that looks pretty good. But then you look at operating cash flow and profit. Operating cash flow negative in financial year 22 by $30.5 million. And this company was loss-making by $110 million in financial year 22. They're also loss-making by $122 million in financial year 21. So Siteminder is not profitable, and they are not operating or free cash flow positive. They do have $27 million in net cash, and the annual recurring revenue at the end of financial year 22 was $129.7 million, and that is growing. And I'll show you the updated annual recurring revenue when we look at the Appendix 4C, and it has grown a fair bit in the last 3 months. Of course, when you look at valuation metrics, P/E ratio is going to be, well, it's negative because earnings are negative, and EV to operating cash flow is negative because operating cash flow is negative. So the only thing we really can look at is price to sales ratio. So right now, Siteminder is trading about 7 times sales or revenue. That doesn't seem too high, but that wouldn't have seemed too high about 2 or 3 years ago when the overall hype in the tech sector was fairly strong. That would have seemed fairly cheap. So a lot of companies were selling at, say, 15 or 20 times sales. So at 6.7, that's not too high, particularly if we are at the bottom of the tech cycle and tech stocks don't go any lower than now. Maybe now is the time to take a position in this company. Now, maybe now is the cheapest Siteminder does get, but who knows? That is just a possible future for us moving forward, and for Siteminder moving forward as well. Now, one thing that really interests me about Siteminder is why in financial year 21, there was a massive difference between the operating cash flow, which was actually positive, 2.5 million, but the loss was 122 million. And even this year, or last financial year 22, the loss was $110.4 million, which was significantly higher than the operating cash flow. And it all comes down to something called net fair value movement on embedded derivative. I actually did Google embedded derivative, and then I just saw what an embedded derivative is, and I just simply gave up. This is really the first time I've seen this sort of thing in the reconciliation of operating cash flow to profit. So I'm just going to leave that to the accountants, and that is the main reason there is a big difference between the profit and the operating cash flow for this company. There's some other smaller reasons like depreciation and amortization. That's fair enough. Most companies have that. Share-based payments. This is always I wouldn't say concern, but it's always something to look at for these type of tech companies. Now, share-based payments for financial year 22 was only 11.4 million. For some American tech companies, I've seen that like well over $100 million. In fact, sometimes you see it approaching $1 billion. But that is something to take a look at, because that does lead to a significant difference, or can lead to a significant difference between operating cash flow or free cash flow and the profit of a company. But those are the main reasons why there is a big difference between profit and operating cash flow. But of course, that biggest reason is that net fair value movement on embedded derivative. Now let's look at Siteminder's quarter report. This is the Appendix 4C for the first quarter of financial year 23. Receipts to customers up to $36.7 million. in fact, in the next slide, we'll look at the cash receipts history. We only have 4 quarters of history, but the trend is starting to develop for this company. And you can also see that trend in analyzed recurring revenue, which for this particular quarter, or at the end of this particular quarter, was $145 million, growing quite nicely from 3 months ago. And in fact, year on year, that has grown 29.2%. Year on year with constant currency, that's at 31.8%. Revenue has grown 29% year on year as well. And if you are looking at constant currency, that has grown at 30.5%. But back to the statement of cash flows here, receipts to customers, $36.7 million. Now, this company spends a lot of money. So $21.8 million on staff costs, $7.6 million on product manufacturing and operating costs, $4.7 million on administration, and $3.1 million on advertising and marketing. Because this company spends a lot of money, they are not operating cash flow positive. In fact, they were operating cash flow negative by $3.2 million. So again, you're going to have to trust that this company can find some scale in the next few years. And by that, I mean they can grow their receipts, their revenue at a greater rate than they're spending. And I think the market does or is anticipating that, because even though there has been a general tech sell-off, the valuation of this company is still just below $800 million. So the market has a lot of faith in this company's management and in the management itself, that it can become highly free cash flow positive in the future. Now, before I move on to the receipts history, I should just mention that the analyzed recurring revenue, which was $144.95 million, I just want to define what they mean by analyzed recurring revenue, because every single company that uses ARR has a different definition, because there is no accounting standards right now. So this is Siteminder's definition for ARR. It is the prior month's recurring subscription revenue multiplied by 12 and the prior quarter's transaction revenue from subscriber customers multiplied by 4. Now, the ARR provides a 12-month calculation of revenue at a point in time, assuming other factors such as subscriber numbers, transaction volumes, pricing, and foreign exchange remains unchanged. So one of the ways they might calculate their analyzed recurring revenue is just look at the receipts of customers in the quarter and times that by 4, which sort of makes sense, because 4 times $36.7 million is fairly close to $144.95 million. So let's have a look at the receipts history for Siteminder. And I do prefer at least 8 quarters of history before I can confidently determine whether there's any trend in receipts. I want to see an uptrend. But with Siteminder and the 4 quarters of history, we are starting to see a trend developing here. And that trend is going in the right way. Receipts have increased from $28.5 million to $36.7 million. So they've increased by over 33%. And that was a really rough calculation. But the main thing here is receipts are growing. Now, we wouldn't be surprised to see one quarter here and there with receipts a little bit lower than the previous quarter. You see this with all these sort of companies, that these SaaS companies, these ARR companies, where there's just one quarter where receipts are a little bit lower than the previous quarter. But the main thing here is the trend is up for Siteminder when it comes to their receipts. And this will translate also to their revenue. Now let's have a look at the daily chart for Siteminder from when they listed on the ASX way back in November of 2021. Share price actually did reach a high of about $7.60 the second day, the day after they actually did list. And one of the reasons I don't like buying into IPOs is because of that initial hype. That initial hype can drive the share price higher. And typically, I'd like to see at least one financial report released from the company, and if not a financial report, a profit upgrade from the company. Now, for Siteminder, the trend is fairly obvious here. The trend is down. Share price has gone or fell from $7.60 all the way down to $2.90. So the share price has more than halved in the past year. So no doubt, one of the reasons why the share price of Siteminder is in a well-defined downtrend is because of the overall negative sentiment in the tech space. And not only is there overall negative, that negative sentiment in the tech space is amplified for those non-profitable, loss-making tech companies, and Siteminder fits into that category. But still, the market cap of this company is still around $780 million. So it could have a lot more to fall from here if the negative sentiment remains for quite a while yet. But I think there might be some value, particularly if this company can trend to becoming operating cash flow and free cash flow positive and then profitable. That's all I have for this first look at Siteminder, a company I've known for a few years. And for full disclosure purposes, I am not a shareholder of this company. I am not even thinking about taking a position in this company simply because I wouldn't consider this to be a high quality company just yet, because they are loss making and they are operating cash flow and free cash flow negative. I need to see some signs, some sort of suggestions, some anything in regards to a path to profitability for this company, and I haven't quite got that just yet. And not only that, the trend in the share price is quite negative right now. If you do have any questions about Siteminder, any thoughts, any concerns, just leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.